Let's
I
go.
don't know. Get your
We
fact
are
check.
live. Wow. Well, welcome back on this cold, cold Florida day to Finance Fridays. We are here with you from Community Lending, and we're here to do this to debunk headlines. And so, one of the articles we've rolled across in the past week or so, I think 10 days or so, is this article that came out saying banks seized 367,000 homes as housing crisis explodes and pain is set to worsen. So that sounds really, really bad, right? Oh, like,
well, I mean, especially when you use words like explode.
yeah, like explode.
You got
It's
the squeaky
exploding.
duck already.
She's already like, so we want to kind of unpack this together and talk about the data and not the emotion, because I feel like that headline is like very emotionally charged. Don't you guys agree?
Yep,
It causes a massive amount of fear. That's the emotion it's creating.
100%. So I'm going to start with you, Connor. What do you think about all this?
I think it's just a way by the media to really get eyeballs, but I don't know. I mean, that's kind of a cynical way to think about it. So I think a lot of people that report the news maybe just don't fully understand kind of what they're reading and what they're reporting. I mean, the fact is there's no denying that the economy is getting weaker. People are having trouble making payments. Credit card defaults are going up without a doubt. Foreclosures are increasing, but they're making it sound like it's a nationwide massive problem and that you have thousands and thousands of homes within a small area that are, going into foreclosure. Yeah. That is a big number, 367,000, which is not actual true foreclosures. It's people that receive notice of default, behind on their mortgage, maybe going into foreclosure.
I think we actually ended 2025 with 46,000 actual foreclosures, not 367,000.
Yeah. But if you look at the total number of homes within America, it's about 150 million. So it's pretty much a drop in the bucket compared to the number of homes that are out there. So it's a problem. It's increasing, but it's nowhere near the problem that they're making it out to be.
So what do you think? I feel like a lot of people that lived through 2008, 9, that are out ready to shop for a home. They might have been kids during that time. So the household, those kids are now growing up and buying homes. And when they see a headline like this, the first thing they think is, oh my God, it's going to repeat what I saw happen as a child, right? Yeah. Yep. So that's given a lot of people fear about moving forward to purchase their first home, when the truth is this is nothing like 2008 and 9. Mm-hmm. Right?
Yeah. It completely ignores the context and the history of what we saw. And I think that's what they're thinking, is that there's going to be a collapse. And everyone said it's gone too high. It has to come down, but it already has come down, but not what they're thinking. There's not going to be a collapse. Not at all.
So, and a little bit more that I'm pulling all of this from Adam. But at the peak of the housing crash in 2009, there were over 2.8 million, right? And Connor has a great chart I'm about to show you from Florida. Yeah. But 2.8 properties with foreclosure filings in a single year, affecting about 2.2% of all U.S. homes, or 1 in 45, right? In 2025, it was 0.26 filings on housing units, 1 in 385, according to Adam. Now, I think that information might vary from source to source, but we're pulling all of this data from Adam.
Well, and explain to the listeners and the people watching, what is Adam? They think it's a person. So,
who is that?
And what it covers.
I lost you for a second. Sorry.
Oh, no, I was going to say, if
Adam is a data aggregator, that they pull data from all different sources.
There we go.
So I'm going to share the screenshot that we have, where we have the Fred chart. And this is the chart that Connor uses. Now, this is Florida. And so I'm going to let you walk through that, Connor, and explain what we're looking at.
Fantastic. So basically, Fred is not another person similar to Adam. Fred is basically the Federal Reserve of St. Louis. What they do is they report all kinds of data. This data is specific to Florida, because we get that all the time. We have a lot of people that say, we get data on the national news, but we're worried about Florida, kind of what's happening with Florida. So this is just specific to Florida. housing inventory active listings. So it's the actual number of homes that are in the market for sale at any given time. Basically what this is showing, that you can see the blue line there, we average about 140,000 homes on the market at any time. The gray bar is COVID. Post-COVID, you can see the inventory dipped down to practically nothing. Then it spikes up and it goes above the average to 140. So we're at about 160 right now. That's compared to an average of 140 pre-COVID. So yes, inventory has spiked, but we are just a little bit above average right now. If you compare that to the 2008, 2009 period where we had a massive spike in foreclosures, and everyone's trying to compare this time to back that time, the peak in 2008, 2009 was 380,000 homes on the market just in Florida. So we're at 160 now. That's more than double where we were back then. So think about how bad it was back then, how loose the underwriting standards were, and anyone could get a house. You had people that had bad credit scores, no income. They owned 2 and 3 homes just because they wanted to buy it. They had no income, low credit scores. Credit standards are so much tighter now. So you have to think about what would have to happen to get back to those levels that we saw in 2008, 2009. We would have to have a deep, deep and disastrous recession with many more foreclosures than we have right now. And we're nowhere near that at this point.
No, and I think one of the biggest things that people aren't taking away from what he just said also is we have such high equity in homes, whereas when the market did drop, they were negative equity. So they were underneath. And right now we're just not there. People, if they fall into a financial hardship, they can turn around and sell to pick right back up, pay off their debt, use the equity in the home. So I think that is what, I mean, like he said, the stronger credit profiles, all of those things, whereas before they didn't have that. So foreclosures, they haven't returned to like the type of runway levels that we saw before. And here's a stat, not a collapse.
Oh, I'm sorry to cut you off, Shay, but here's a stat to follow back behind you that is also coming from Adam. 85 to 90% of homeowners have positive equity, with the average equity exceeding $300,000 per borrower. Now, I don't know what that looked like in 2008, 9, we'd have to look that stat up, but that's a huge amount of equity. So people aren't just going to walk away like they did back in 2008 and 9 when they had no skin in the game.
Yeah.
Well, Connor had that chart before where it shows from 1942 how every property has appreciated, except it was negative that 1 year of the crash. And now we're still appreciating. It's just what levels are we appreciating? 3%, 14%. Every year is different, but the point is it was still appreciating. So so I think that the key words, and I think back to my kids, like follow the context clues. What's the key word? Foreclosure activity, right? Activity doesn't mean foreclosed. It means maybe they defaulted, which started a notice of foreclosure, but then they can get out of that. Yeah. So the activity increased, but it also, that's as the market started to like normalize, you know what I mean? So I think this means we're moving towards normal, but we're not plummeting to disaster.
No.
So
I mean, you look at the absolute level. Yeah, sorry, go ahead.
I was going to ask, like, how can buyers tell the difference between real market shift and the noise that's happening with these headlines?
Call community lending. We'll let you know.
Yeah.
There you go. Yeah, you got to get away from the media, because I mean, that kind of like I said, I mean, they're there to sell a story. They're there to make it seem a little bit more dramatic than it is. And the way I tell people that don't really understand kind of where foreclosures are, where they've been historically. Well, you had a little screen shift on me there, kind of threw me off. So
I was trying to get you off your game, Connor.
Yeah, exactly. So think of it this way: if you're a homeowner and you've got $50,000 in debt, and all of a sudden it doubles to $100,000, that's a real problem. That's a serious problem. But if you've got $1 of debt and it doubles up to $2, that's still not a problem. That's kind of what's happening with foreclosures right now. They may double. They are increasing dramatically, but from extremely low levels right now, for a lot of different reasons. Number one, kind of like Cheryl was saying, people have a lot of equity in their homes. So if they start losing their jobs, if the economy goes down in a recession, which it's not even expected to at this point, and they can't make their payment, what are they going to do? They'll just sell their house, they'll take the equity, and they'll move somewhere else. So they don't have to go in foreclosures. But number two, the big one, which no one really talks about this, they talk about underwriting standards. But what does that mean? That means it's tougher now to get a home than it was back in 2008, 2009. And if you look at the breakdown of buyers that were buying homes back in 2008, these were low quality borrowers with very low credit scores. And you look at the peak of buyers that we had in 2021, 22, a large portion of these buyers, I don't know the exact percentage, but it's something like 40% of buyers had a credit score over 760. So not only do these buyers have a ton of equity in the house, they could just sell, take the equity if they got into trouble, but they have very high credit scores to begin with, and they're extremely high quality borrowers. So the likelihood of them being foreclosed on is extremely low. So you can't even compare the two periods.
Well, and what I take from that headline is, bank seize homes. So what that suggests is that these banks are coming in, they're suddenly owning and selling all of them. And that's not the case. So now people are thinking, oh, I can go get a great deal and buy a foreclosure. And I've had a lot of customers call and say, I want a foreclosed property. But the reality is only a portion of foreclosure filings actually end up in the bank taking the home.
Correct.
Correct.
And I think
because foreclosure is a process. And I think that's what a lot of people aren't understanding is they think once I have entered into the notice, I'm done. But a lot of them can get help. A lot of them can restructure their payments, or they can sell before the bank ever takes ownership. But the data, according to Newswire, it shows that completed bank repossessions remain far lower than historical crisis levels. So what did not show up in any of this data is what this headline is implying, is that the banks are now suddenly taking over massive piles of homes because homeowners are failing to make payments, and the numbers just don't back that.
So I think when you look at this, during the last crash, a large share of borrowers were underwater. We talked about that. 80 to 90% of homeowners have positive equity. But when you look at what's happening today, it's 85 to 90% less than what was happening in 2008 and 2009. And coming from somebody like myself who lived through that as a mortgage originator, lived in the #1 hardest hit city in America, which was Cape Coral, Florida, we had a foreclosure bus that was driving around and taking people on foreclosure tours. So when I see this headline, banks seize 367,000 homes, I get PTSD from 2008 when one in every couple of houses was boarded up, and we were taking people on tours. So if you lived through that, this is triggering. This headline triggers you.
Yeah, I mean, it definitely is. But I mean, that's why it's important to have these talks and to find out what's really going on and talking about the quality of the buyer. And this is really tied into kind of what we're talking about, but no one really discusses it, is the quality, if you can call it that, of the economy, the performance of the economy. So, we don't have that chart, but the expectation from multiple agencies out there, government and private, is that economic growth for 2026 is still going to be 1.5% for all of 2026. That's nowhere near recession level. So we have high credit underwriting standards. People have a lot of equity in their homes. You had high quality buyers that were buying in 21, 22, and an economy that's not going into recession. That is not a scenario where we're going to have a huge amount of foreclosures at all.
No, it was what? It was up a bit in 2025. So that was 14% increase from, the previous year. So it sounds like it's crazy, but it's really not, because it is kind of normalizing after the unusually low foreclosure rates, during the pandemic. Like there wasn't, anything. But
I think too,
and every state's different. That's the thing, is every state is different, and the data for each state is going to show differently. So they are seeing according to Housing Wire, they're seeing higher foreclosure rates in Florida, Texas, and Delaware, but it's still not like a crash. That's not what we're seeing. So it's just
Florida's starting to get picked on right now, and it's kind of frustrating to see that, because I think it was up in Lakeland, Polk County, somewhere up in there. They said it's the highest in the nation. It's a disaster. So it was hurricanes at first, then it's insurance because of that, then property taxes, high prices, Now it's the highest foreclosures in the nation. But there was a chart that was in my presentation that I did a couple of weeks ago that was specific to just Florida. So back in 2008, if I remember correctly, you had for every 22 homes, you had one foreclosure. Okay. 2009, it got worse. For every 17 homes, you had one foreclosure. I mean, that's a huge number of foreclosures. Now, right now, 2025, for
Tell 'em,
every
Connor.
2,185 homes out there, you had one foreclosure.
Yeah.
So it's nowhere near what it was back then, not even remotely close. So
Well, I
for
think
people,
too,
for,
I'm sorry.
that's all right. So I was just going to say, for people to say, well, yeah, that's national, but Florida's a disaster. No, it's not. I mean, these are real reported numbers. These are actual foreclosure filings that are, 2,100 homes. There's one foreclosure. So it's a very healthy market compared to what it was back then.
And showing that on our Realtor's Edge, because Connor does the Realtor Edge media, the presentations on his side, and he just did one for us over here, which people are asking if we're going to do it again because a lot of people missed it. They were blown away when they saw the difference of 1 in every 2,178, something like that.
Yeah.
They were blown away that that's the real numbers. They're like, you know what, this is a breath of fresh air, because even some realtors were falling for the headlines.
Yeah, you never hear that. Yeah. Yep,
They Google, they get whatever sponsored, most whatever Google trend, thing, but they're not getting the facts. So I think what's important is Housing Wire is a great source. Adam is a great source. Community lending is a great source.
That's
So
the best source.
find the sources that show facts. Don't go to CBS News. Don't go to this. I mean, sometimes they are reporting what's happening. It's not always 100% factual.
Well, then kind of like Deanna was talking about, you have to talk about what is the definition of a foreclosure? Is it actual a foreclosure? Is it a notice of default? What does that mean?
Yeah.
So that's important too.
And I think one of the, I mean, I was going to say, some people are like, well, how do if I have had a default, what do I do? So I think that goes into, communicate with your servicer, see what options they have to, whether it's forbear, whether it's get on a payment plan. They will work with you because they don't want to see this happen. They don't. They want to, I mean, it is what it is. So definitely communicate with them, because you can get out of it. And I think that's what most people don't understand is, how do I get out of it? And like you said, Deanna, you had the PTSD from before. That's probably triggering them to think this is going to happen to me. And there's so many more options and resources out there to protect the consumer, to protect the buyer from this happening to them. So that's why we follow the guidelines and we make sure that they're accurately pre-approved.
Yeah, I think one of the most important takeaways, because it's funny when I present this information, I talk about, all the stuff that's happening with regard to pricing, insurance, taxes, foreclosures are increasing, the economy's getting a little bit weaker, prices have dropped in, like you said, Deanna, Cape Coral, Sarasota was one of the big ones, hit down 10% over the last year. And a lot of people take that as being pretty negative, but I look at it the complete opposite way. I go, okay, you think about all the stuff that's happening, specifically here in Florida. We've had, a lot of hurricanes that hit Florida. We had high prices, doubled in some areas, high insurance costs. We've had everything against this state, and prices are only down 10% last year in the hardest hit area. The whole state is only down 2%. We had rates on mortgages in 2023 in October go over 8%, in addition to all these other problems that we've had, and we're only down 10%. So, and foreclosures are still at record low levels, even though they're starting to increase somewhat. So I would have a complete opposite take. I would say this market is so unbelievably resilient, given what we've been faced with, that I would take any drop in the market as a huge buying opportunity. That's the way it should be looked at. And everyone's taking this as kind of a negative thing. It's not. It's showing you how an amazing investment real estate is, and the fact that we've only dropped a little bit given all the headwinds. So that's the way I look at it, and that's the way I present it to my clients.
And so, Connor, I have a question. So, we're talking about how, the market is better than it was in 2008. At what point, what number should people actually be looking at when they hear foreclosures are up? Maybe they should worry. Like, what does that number look like?
Well, I don't really have a number in mind, but I mean, I would say, if you, I mean, just compare it the way it was back in 2008. You know, we had nationwide, you had 4 million houses that were on the market. The average is 2 million. Okay. That's a lot of houses on the market. You're going to have a lot of people trying to sell. They can't sell. Prices are going to drop because of that. You have a lot of people that are having to sell because they're going to get foreclosed on. Right now, we're well below that 2 million mark. So I don't have a certain number in mind where it spells trouble, but I would say it's something to watch. But even though you've had a doubling of foreclosures over the last, year or so, year and a half, it's still off a very, very low base. If it keeps doubling every year, that's concerning. But still, though, it's nowhere near what we saw in 2008, 2009. And if you look at nationwide, how resilient prices were back in that period, even though we had 4 million houses on the market. Again, that tells you how strong real estate is faced with just absolute calamity. It's a whole different environment that we're in right now. So there's just no comparison whatsoever.
Yeah, thanks for that.
Yep.
Yeah. So I think in conclusion, foreclosures are rising, but the absolute level, market structure, and equity position are fundamentally different than 2008 and 9. Agreed?
Yep. Definitely.
So I think that is where we need to leave people. Like when you read these headlines, if you have questions, reach out to one of us. We'll love to unpack it and give you the data that either says it's true or the data that says this is off and it's being skewed. And it's used as a scare tactic, and it's clickbait. So I think it's important that you critically think when you're reading newspaper articles or articles online. When you see all this stuff on social media that people are claiming this or that, don't just take it at face value. Look under the hood and make sure you're looking at the data that supports the claims that people are making.
Yeah, and don't jump on the trend just to get clickbait, because it's only creating more chaos and confusion. And we're all supposed to be an advisor. Whether you're a realtor, you're a real estate advisor. We're supposed to guide people properly and give them the facts. So let's make sure we're doing our due diligence.
100%.
Yep.
All right. So until
Awesome.
next time, it was a pleasure, you guys, and looking forward to the next one.
Yes, indeed. See you guys.
Bye-bye.
Bye.